Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans Cowboy here. It is Monday, April the 13th at 5:24 p.m. EST. We're going to take a look at the charts today. We're going to talk about what events might come, and I'm going to show you a couple of trades that I'm looking at taking. But before we do that, take a look in the description. There is a free algo. You click the link, takes you to a video where I build an algo. I show you how it's done. It's a very short video, pretty simple. I show you how to turn that algo into code. Now, once you've done that, what you're able to do if you want to is to connect your computer to your broker, and the computer can trade for you. It's like a trading bot. Now, you do have to optimize this code before you do that. However, I also show you a lot of the technology that traders are using to create those bots so that they can trade once optimized. Really cool stuff. Check it out. Also, 60% of you who watch this do not subscribe. So do me a favor, like, subscribe, helps us out in a big way. We're going to take a look at the usual suspects today in the charts. We've got the NASDAQ, USDJPY, BTC USD, EURUSD, GBPJPY, gold, and silver. Before we take a look at the charts, we're going to take a look at the economic data that's coming this week that can affect those charts and give us some trading opportunities. We're going to take a look over at forexfactory.com. So Tuesday is really the only big day for USD news. At 8:30 a.m. EST, we have the PPI. Now that really could throw things off a bit if this actually comes out very, very different to what they've estimated that to be, right? This is a month-over-month number. If they expect a 0.4% increase and it ends up being like 0.9, that could really change the charts a lot. There's not any news to speak of until Wednesday at 9:30 p.m. EST. The Aussie employment data comes out for Australia. That can affect the Aussie charts. And then right around the market open, the European open, we have the British GDP month-over-month coming out on Thursday. And there's nothing else for the week in news. So it's going to be a nice, smooth week for trading, as long as it is not boring and as long as Donald Trump does not say anything terribly insane. Right now, we do seem to think that things are calming down with the war. There's a lot of talk about the ceasefire being fragile, so on and so forth. The information that we're getting says that the hostilities are going to be down for quite a while. And if that's the case, the markets will continue up. And we're going to see that already with the NASDAQ. So let's take a look. Okay, so we had some news over the weekend about the negotiations between US and Iran stalling, and that caused a massive gap down in the market open. You can see that where when the futures opened on Sunday, the market gapped down massively, but it came roaring back. So basically, the market seems to think that the hostilities are over for now, and that does go along with some of the intel that we are getting from the people we talk to around the world, namely through V the Guerrilla's contacts. That said, it does look like the NASDAQ right now is going to head back and try to grab those highs again at 26,348. So right now, just right this moment, it does look like a decent trade. I'm not set up to trade the NASDAQ as it stands right now, but if I were to take a trade, I would consider a long trade right here. And there might be a pullback to grab this and where it makes sense for the risk to reward. So this isn't that great of a risk to reward. The best I might squeeze out is a 1.5 to 1, and that is within my rules. I could take this trade, but what I would look for, if possible, is some sort of pullback to give us a little bit more structure. And then that way I could actually take a trade that looks something like this and have a tighter stop and maybe even anticipate that breakout a little bit and have like a 3 or a 4 to 1, something like that. So that's how I would do this. And of course, like I said, tomorrow's PPI and Trump could say something and this could all get messed up, and that's just the nature of the beast. But that's what the algos are saying. I mean, this is very bullish high time frame, and we're also getting some clues that we think the market is going to get juiced up for the rest of the year leading into the election because most people vote with their wallets. What do I mean by that? Maybe it's going to be interest rate cuts, maybe it's going to be a whole lot of things, who knows, but it looks like they're going to try to push the market up for the rest of the year until November. We'll see about it. Let's take a look at USDJPY. Now this one is really tricky. You see I've got a lot of lines on the chart, and if you draw enough lines, you're going to be right at some point. It's not really a way to forecast. My main forecast is sideways. I think this is going to be range bound until it's not. And that's what's tricky about range bound. You don't know how it's going to break up or down. And it can even do like it did back here where it fakes a break to the upside and then gets slammed down by some kind of news. So this is why I'm not really doing an in-depth forecast on this. I think it gets sideways. Now, if it breaks up, it will probably break upwards because high time frame, this is bullish, but there is some pretty strong price action resistance. There are a lot of bears that are going to want to sell up in this area. So price could actually break down and might even head to this lower bound down at 158.30. And if it did, I would be looking for a long, and I would be looking for a strong one. Now, of course, I would wait for price to get down there, see what the market looks like. I wouldn't just blindly enter that, but this might be a really great opportunity to catch a nice move back up into this area. Now, if that doesn't happen, of course, one could simply just buy the bottoms here in the range and sell the tops. So say buy this bottom, do some range trading until that breakout does occur, and then of course trade the breakout. So that's perhaps a long, and if price did what I think it was going to do, then I would catch the short at the top. And these are usually some really good risk to reward trades as long as your rules match up with them. You're looking at 2 to 1, 3 to 1, depending on how you catch it and how generous your stop loss is. If this were to break to the upside, then what I would look for is some sort of pullback maybe, or at least metric saying that it's going to continue up, and I look to grab along up to this area, which is 160.498 yen to the dollar. So that's what that trade would look like if it were to break to the upside, right? So of course the stop loss would be based on the structure of my rules. That's all up to you, how you do it, as well as taking the trade itself. It's got to match your rules to take the trade, but that's how the trade looks for me right now. And of course, if you had a breakout at this top here, I'd be looking for a similar play: breakout, pullback, long and up. Let's take a look at Bitcoin. Bitcoin's interesting. Now, Bitcoin high time frame is bearish, and these moves up during this period of time can seem really convincing, and then they just get like slammed. So we might see a repeat with Bitcoin at this 73,300 level of what we saw back here, where it touched here, broke down, fooled people, and then really got slammed down, especially if news comes into effect, which is what screwed me on this trade that I had over the weekend. The metrics said it was going to go up. We got the news about the Iran negotiations not doing so well, and it crashed me out of my trade. It's just part of the game. It is what it is. And I just wasn't really available to continue to take that immediately. I was not sitting at the computer trading, able to reverse position and take the move down. I tend not to sit in front of the computer at the weekend. I have a life. That said, what may happen is exactly that once more, or if it does break out, perhaps a liquidity grab on the way down and a move up. Now we are starting to see in Bitcoin a very dangerous time to trade. We're seeing the momentum ignition algorithm start to rear its ugly head. And those are the Bart heads. Comes like this, makes a Bart head, messes you up. Moves like this, makes a big old Bart Simpson head, and then comes down and takes you out. So this is a very difficult time to trade Bitcoin. It's pretty typical after the high on the way down to the low. And this also is a sign that we are probably going to see some lows in the next 6 months or so. That said, there are times to make money. There are abilities to make money in this. I probably won't be trading it very much. It is very scammy, very wicky, and it is what it is. But if I had to call this, I'd say probably a move up towards 76 to get some people excited, maybe even a little bit higher, and then they'll probably just slam right back down on you. But that remains to be seen. We have to see how that goes. And if I'm going to trade it, I'll wait until price meets one of these resistances to make a decision. Technically, I could take a short right here, but at this time, Bitcoin is really, really messing with people on a low time frame, and I really wouldn't trade this any lower than the 3-hour or 4-hour time frame. This would be swing trading for me. So I'm just going to stay away. Lots of other opportunities in other markets. We're going to take a look at the Euro EURUSD. So EURUSD is just really bullish right now. There are some pretty high resistances, right? It's got a long way to go before it's going to make some tops. We got a top way up here, way up here. So it's not like we're seeing a high time frame move, but at the moment, now that this news is gone and the dollar has gotten weaker, mostly because of Iran, then I'm expecting this to head up here. Now, there might be a short trade right here, but I'd be very careful with that. This is very bullish. Now, a short trade is possible, maybe something like this. I would be out of the trade before any major consolidation such as this. I wouldn't stay in this very long. In fact, I won't take it unless it's on a very low time frame. And that said, probably the trade I'd be interested in is a breakout long, so it breaks above, maybe a small pullback, and I grab a move all the way up to here. Of course, stop loss to be determined by structure, so on and so forth, but that's probably the trade I'd be interested in taking, right? But we'll see if price gets up to this 118.32 area, which is right here, and it looks weak in all the metrics to say we could see a pullback. I might grab a short and just manage it really closely, grab some cash, and then look for that long. But if I'm not able to sit there and manage it, or having the algos running it automatically, then I would simply just let that come back down, grab the long on the way up. That's the safe play if you ask me. Let's take a look at GBPJPY. Now, we had an absolute banger of a winner. We did. We won a big breakout trade on this last week. It was like a 4.5 to 1. I took the trade publicly in Algo Factory, and we had it as one of the live lab trades. And basically, it's like putting in $100 and taking out 460, or putting in, say, $1,000 and taking out 4,600, right? It was something along these lines. I don't have it right in front of me, but it was a big, big move up with a very, very tight stop loss. And it was just made possible by the fact that this was a breakout trade and all the metrics allowed me to do it like this. And it was great. We won. Anybody who saw me win got to see me win. I say we, the royal we, right? Because, we're not a signal service, but everybody got to see me take it. They got to see me plan it. They got to see me track it, and we took it, and that was it. It's hard to call this because this is such a bullish chart right now. I have a high time frame fib level because the next resistance is like way up here. It also happens to be the next fib extension, but there's like no resistance anywhere near. So price really is just free to head up until it gets tired. So I just did some basic projections towards the end of the week. It's going to go up some, more, or a lot more. That's what I think. But that's about the extent to which I can predict at this time. Now, of course, during the morning shows that might change, but that's what it is for now. Let's take a look at gold and silver. Now, I drew this to show you that it's in an uptrend, and the physical market actually has continued to be strong despite all of this selling in the paper market that caused gold to go from topping out at about 5,400 all the way down to 4,100, but it continues to head up, and every pullback gets bought up. So this might be an indication that the physical market is taking over. Now, what's going to happen here is there are some key levels it has to break in order to remain bullish. The key level, of course, is this top here, this high. It has to break above that high to stay in an uptrend, but it might have a hard time actually breaking this level, which is at 4,800 or so, right? That's a tough one to break because you have a lot of areas where it's actually rejected at that level. So now the higher level, which is 4,865, if that can get past 4,800, I would say the odds are pretty good it's going to break 4,865, but it might be messy, right? So it might look something like this, where it just kind of meanders about, pulls back a little bit, and then kind of does one of these. I don't know that we're going to see this hard, strong move up. It could happen. I just don't know. So this is the most likely path I see. Now, if price rejects again at that 4,800, you might end up seeing a pullback where it grabs a little liquidity, but as long as it doesn't go below this low point right here, which is 46.48, or so, like 46.45, then it's still technically in an uptrend. So as long as this pulls back but bounces right about there, price is still in an uptrend and bullish, right? That's what I expect. Just kind of a messy sort of grind upwards with a chance of some kind of pullback. Let's take a look at silver. Very similar story, almost exactly the same. You got the pullbacks, higher highs, higher lows, uptrend. You have the hard to break 76.50 area, which if it does reject there, that's a bit bearish. You have the high point, which is up here at 77.86, so it needs to break above that to stay in the uptrend. And if it breaks below this level right here, then price begins to violate that uptrend, which that level is 69.56. So basically you want to stay above 70 in order to remain bullish. And if I were to draw what I think happens, I think again, it is just a messy sort of meandering move up. And if it can break, then it will continue up. And if not, it'll just kind of grind sideways and be a little unpredictable. So that's all the charts for this week. I went into a little bit more detail. I probably would be careful trading silver at this point and gold. That's why I didn't really mark any trades out for that. I would stick to Forex because it just right now has a bit more volatility and makes a little bit more sense. We do this every Tuesday, Wednesday, Thursday, 8:30 a.m. EST. So we refine all this stuff during that time. Come join us. We do it live. So you can come on, you can talk to us, you can ask us questions. If you're watching this, you can leave a comment and say, hey, can you chart this for me? And I may do that. I might take a request. So don't be afraid to do that. But this really is what we do. We predict where price is going to go, when it's going to get there. And that kind of information allows us to extract money from markets on a regular basis. It's not necessarily some way to get rich quick. It actually takes work to learn how to do this. And we're increasingly using AI to shorten the time in which that happens. And with the new development of AI agents, we're actually able to help people learn how to have this trade without them being at the computer. But this is an entire process. It's not something you just plug into AI. Otherwise, everybody would be getting millions of dollars from the market, right? This is something you have to learn how to do properly, and we are here to do it for you. Take a look in the description. There is a free algorithm like I talked about before that gives you a preview of how that's done. You see me build it, turn it into code. I show you tools traders use to connect that coded algo to their broker so they can trade as a bot for them as a trading agent while they're not even sitting at the computer. You do have to optimize the code first. In the meantime, thanks for watching. We'll see you bright and early, 8:30 a.m. EST, and that's on Tuesday, Wednesday, Thursday. AlgoFactory.tech. Learn how to trade like a hedge fund pro. We'll see you then.